Hey folks, Chris Versace here, portfolio manager of the Street Pro portfolio, and it is time for another Stocks and Markets podcast. And I have to say, coming out of the gate, I think we have an extremely timely conversation given all that's going on. Yeah, we have a slew of economic data as we begin the first full week of trading in January. I'm sure we'll talk about it, but we also have renewed geopolitical tensions given what's going on in Venezuela, Greenland headlines, and other breaking news that I'm sure we'll get to. So, who better to have join us than Peter Tchir, head of macro strategy at Academy Securities and a Street Pro contributor? Peter, it's been a while since we chatted. Thank you for joining me. How are things?
Excellent. Very busy start to the year with everything we do on the geopolitical front as well as the normal start of year stuff. So it's exciting. I think it's going to be a long year at this pace, though.
Don't say that because I felt like 2025 was a very long year. I don't know if you felt this way, but really from about January, early February, every day checking the headlines, seeing what was said, what it might mean. Is it real? Is it, a shell game? So you're thinking we're in for more of that.
I do. I think, the administration wants to get a lot accomplished. They want to get a lot accomplished ahead of the midterm elections. I think
Hmm.
their whole goal is to win the midterm elections, and they realize probably stocks being higher coming into the midterms is a part of that. So I think they're going to try and do a lot of things. I'm not sure whether they'll all be successful or not, but that's kind of, I think, what we're facing right now.
So did you see, apparently Trump spoke earlier this week at a retreat for Republicans saying that you better win the midterms because if not, I'm going to get impeached. Surprised?
No, it seems like I think that's certainly the lesson he learned from Trump 1.0 is if you lose the midterms, the last 2 years are basically a disaster. It's a write-off. You're going to face all sorts of hurdles. You're going to get impeached. So I think they have a full understanding of that. And again, under Trump 1.0, I don't think he was quite prepared for those realities. I think under Trump 2.0, he's got the team in place. He knows what he wants to do. I don't know whether he's
Hmm.
going to be successful in doing it or not, but there is a clear plan and agenda, and I think it's on a very fast timescale.
Interesting, interesting. What does your crystal ball say? Do you think as we sit here today that it's kind of a slam dunk that the Republicans take it?
Ooh, not by a long shot, I don't think. I think, there's a lot that can go wrong in between now and then. Having
Hmm.
said that, what I do like is if we're focusing on what we've been calling ProSec, production for security and kind of economic resiliency, I think then there's a good chance. I think if we keep that in motion, that we're doing things like building out Intel, we're doing things like building out electricity, we're finally focusing on getting and processing, refining rare earths and critical minerals. So I think if we do all that, you will have a nice build out. The accelerated depreciation that went into effect
Hmm.
fully
Hmm.
helps a lot. So those are kind of the good things. On the other hand, I think, disarray with our allies could be problematic. I think China may decide it's time to clamp down on their exports to us of the rare earths and critical minerals. So
Hmm.
there's a lot going on, and I'm still a little bit dubious about the AI spend.
So I didn't hear the consumer who happens to be the voter. What about them?
You know, I think it's going to come down to a little bit on electricity prices. Oil and gas are cheaper, which is, a benefit. I'm not
Hmm.
particularly concerned about high inflation. I think this affordability, it's an issue, but I don't think it's going to be what drives the election. I think it's going to come down to really the economy, and we can live with 2 to 3% inflation, which is where I think we'll be if the economy feels good, if people are getting real jobs, if people feel secure in those jobs. Again, I kind of look at these things, we're trying to recreate almost national champions. You can look at Intel or what we're trying to do with U.S. Steel,
Hmm.
or
Hmm.
we, I guess, this administration. And, if you work for one of these national champions, you probably feel more secure in your job than you do otherwise. I think you're seeing some of that spread to the energy business, to the electricity business. You're going to see it probably in the biotech and pharma, all these things that are critical for us. I think there's going to be a boost there. And while some of these things do take a while to get online, it's going to take 2 to 5 years to get some of the power in place. The
Right.
build out will create jobs, right? There's going to be a lot of jobs. You should see companies like Cat, Deere, Navistar all do very well as part of that build out. So that I'm optimistic. If we can get that part churning, I don't think we have to worry as much about inflation or affordability. I think that will go to the backdrop a little bit.
Interesting, because I saw this article in the Wall Street Journal. I think it was December. They were referring to a gathering of CEOs, and they were saying that we don't have a lot of plans to hire. In fact, we might even be looking to scale back. And I think there's Some of it's the economy, some of it's uncertainty. There's this looming question over AI and jobs, which, I think it's personally, I think it's going to be a repeat of what we saw with the dot-com era, where we might have lost some jobs, but other jobs were created. I just I just get a little concerned if we talk about the midterms and the consumers not feeling better. Even you just said some of these initiatives, they will have long-term benefits, but that doesn't mean we're going to see the economy and the consumer feeling better come November.
Right. And again, I think the government just announced 2.7 billion into nuclear business just, I think, 2 days ago.
Mhm.
Again, if we can get those things, then I think we see hiring in kind of the broad economy. Right now, I really feel we've kind of had this little I-shaped economy where this dot surrounding AI, tech, and a few things has done very well, and
Yes.
everything else has lagged. That has to turn. If that doesn't turn, it's going to be a disaster coming into the midterms. And right now, I agree with you. I think hiring plans are a little bit on hold. Everyone's still trying to figure out what to do. I do think we're in this weird situation where people are spending $20 million on AI to not hire 5 interns. I don't know how much they were paying for their interns, but like maybe they would have been better off hiring the interns and not young employees rather than spending the money on AI. I think we are going to see a little bit more questioning. And I know for myself,
Mhm.
say about a year and a half ago, if I said something, I relied on AI for some part, I was trying to sound semi-smart and get some extra work done. Now, if I put, oh, I relied on AI for this part, it means it might be wrong, but I'm not taking responsibility for it being wrong.
Correct.
So I think
Correct.
there's a little bit of skepticism around it in a lot
Yeah,
of ways.
I ultimately I think it's going to be just like the
Yeah,
internet, a tool. And I continue to think that, and I say this all the time, you go back in 1998 and you say, what do you think you'll be able to do with this, the internet? And then you look to where we are today. There's going to be a lot of things that happen that we haven't even thought of yet. And I to me as an investor, it's tracking that adoption and usage that matters most, and just thinking through the implications on digital infrastructure and things like that. So you said that ProSec 2026, that's your big theme for the year,
yes.
right? Now, is it, you said, just could you recap it? Because you
Yeah,
kind of you kind of ran over it a little roughshod.
right. So we're talking about what we call production for security or ProSec, and there's an element of resiliency. And I ultimately think it's going to kind of replace ESG as a policy tool and as an investment kind of
Oh,
thing.
interesting.
And why I think so is I'll go back, I like Psych 101. It was probably the most useful course somehow I took in college, but you had Maslow's hierarchy of needs. And that, if you're not familiar with it, says you kind of have to you have to have shelter. You got to take care of your basic
Hmm.
physical needs,
Hmm.
and you slowly move your way up to self-actualization. And I think when we were looking at sustainability, oh, we could figure out what we would really like to happen, but it was very dependent that we were getting everything from China. That has fallen through the crap, right? We cannot depend on that. So I think we're
Right.
going back to that ground level and saying, what do we need to produce ourselves? What do we need to produce with our close allies to make sure that we, can't get screwed over easily? And so I
Hmm.
think chips are a part of that. AI and data center, the electricity that goes in hand with that. I think you're going to see it in pharma. You're going to see it a lot of commodities, the rarest and critical minerals. And again, I think the one thing I don't think Trump articulates this very well. When we've talked to other people in the administration, I think they understand it's the processing and refining that's more
Hmm.
important than the raw resources, right? If we get found a huge amount of cobalt tomorrow, we'd still have to ship it to China to get processed and refined. So I think that's got to be the element because we can buy things like cobalt on the open market. There's that ability. It's that processing and refining. And I think so the US government jump-started this, right? I will say even you can look at Biden, right? He put the CHIPS Act in place. So there's been this
Hmm.
slow realization that we need to do some of these things. And I think there's a sense of urgency that's been twofold. One is all the trade negotiation with China showed us very clearly China holds the keys to our rarest and critical minerals, which in turn hold the keys to our ability to build and sell products. So I think that's created an element of urgency. Um, and then the data center and AI build out is showing us, shoot, we do not have enough electricity, right? Elon Musk tweets about that every single day, I think, multiple times a day. I don't think he's wrong. So that kind of created that sense of urgency. We're going to go through that. And that leaves, I think, a huge amount of investment opportunity.
Okay. Okay.
And
So,
that to me it's just a change of mentality. And while the US government started this, you're already starting to see capital go to it, right? You're seeing Intel. Hey, people want to buy Intel. People are now scouring the world for what sort of things would fit into this. What is the government
mhm.
going to invest in next? I happen to own some LEU, which was one of the names that got a bump. I like kind of things in this space. I actually own AES, which although it's solar, I think Trump is going to have to cave in on solar. and add solar to the electricity production. And we're talking to a lot of private equity companies. They're looking for companies that have mining rights that have been unused. They're looking for patent
Interesting.
processes. So I think it's U.S. capital that's going to drive this the next stage. And ultimately, Europe and people are going to get in. I'm convinced sometime in the next year, BP and Shell are going to be two of the best investments you can make. Europe's finally just going to take off the blinders and say, you know what? You guys go back to doing what you were really good at, and that is extracting energy from the earth. And we're not going to put all these strict guidelines
Right,
around you
right.
because we need that.
So it's interesting because in the States, you're already seeing ESG fall by the wayside. It's still hanging on in Europe, but you're thinking that's going to go away.
I think that's going to go away, and it's already being reframed a little bit. We were talking to a large European bank who, when Trump came in and they announced, everything anti-DEI, all this stuff, they were worried they were going to not make their lending output this year in the U.S. In the end, they were able to do it, and they just refined it a little bit into, sustainability in terms of defense, in terms of, resiliency, economic resiliency. So they were able to get the lending out kind of within their existing ESG framework. They have to tweak things, but I think that will come. And again, I think you even look at Canada. Canada's, I think, been a great exporter of raw resources. They haven't done a lot of their own processing, refining. And some of the wake up call Trump has given to everyone is saying, you have to do more of this on your own. It doesn't have to be
Right.
100% you. So I think it's going to take longer to play out in Europe, but you're starting to see the backlash. Even when I'm on Twitter, right? The backlash against, Germany, what they're doing in terms of their electric car production, in terms of what they're doing about their electricity generation. It's there. It's visceral. I think they're going to be a solid year or so behind us, but I do feel that that's the direction this entire planet's now moving.
Interesting. So you need to do more for yourself. That we've seen that really develop over the last year in terms of defense spending as well, where we've seen different NATO companies ratcheting up the percentage of GDP that they're, targeting for defense spending. Do you think they're going to continue to go through with that? Do they need to?
I think they need to. I do think they're going to, one way or the other, some of the money is going to be a little bit fudged. So they're going to use money to repair their ports. And they can say, well, we need better ports for our Navy, but it would also have the benefit of actually being more economically efficient for them to do that. So I think you're going to see some percent of that spend go into infrastructure and rebuilding. Again, I think there's this awareness that, geez, we need our own electricity. They're
Hmm.
further behind on us. And I think, again, there's clearly some issues whether NATO will still fracture and whether they need to do the 5% to keep President Trump happy, or if we are really going to do something like annex Greenland, they're going to have to spend this money themselves. But I think that development, that business is going to occur.
All right, you just opened the door, so I got to ask, right? Greenland. And then I want to talk Venezuela real quick. So Greenland, we're seeing a lot of this. You're seeing conflicting things. We may use the army. We may buy Greenland. How significant is this? Because I think the simple understanding with NATO is if you attack one of us, you attack all of us. Why do we need to do so? Why does the U.S. need to, quote, acquire Greenland?
I I'm perfectly comfortable with the idea that we need to invest and get traction in Greenland.
Hmm.
Maybe that means buying parts of, buying into companies or investments there. That I'm 100% on board on. But I think if we're trying to buy or annex, I think that's like just incredibly problematic. And the one
Agreed.
thing I don't understand about a lot of this, and I've talked to some experts in the area, is it's hard for me to believe that there's a lot of easy or economically viable mining and things in Greenland that aren't already being done. Like I know to me, I can understand in Venezuela, there may be rare earths and critical minerals that are not being produced.
Hmm.
Oil is
Hmm.
not being produced efficiently. I find it hard to believe that we're just going to find all sorts of economically viable projects in Greenland. And I think that to me is a concern that we're going overboard, and I'm not sure we've done the full work to say, yes, they have lots of rare earths and critical minerals, but they're very hard to access. It's not an easy environment to take anything or extract things from. So I'm a little bit worried we're over our skis on that.
Yeah, I am too. And the other concern I have is if the US opts to do something, I'm not really sure what Denmark is going to do in response, right? And that opens up a whole, another geopolitical can of worms, where at the same time, on the other side, we really haven't seen this Russia-Ukraine peace settlement come through. I get a little worried about what happens in the middle.
I am very worried. I think, when I looked at the world, say 2 years ago, or even the start of last year, I kind of saw China their kind of axis of, bad people. So you got Russia, North Korea, Iran.
Hmm.
And then they had this extension of a lot of autocratic, resource-rich nations. So Venezuela would be high up there, and that was kind of their sphere of influence. And then you had the U.S. with the Western allies. And now, when I vision the world, I see North and South and Central America
Right.
aligned under direct U.S. kind of like real control, real efforts to change things. You kind of see China, I think, having a little bit more leeway to do what they want in and around their zone of, and then you kind of see Europe as a mess. I feel Europe is very, it's just so clear that none of the EU leaders really have, or the leaders of the individual countries have much power or sway. The EU as a concept is struggling to get much done. You've got Russia causing noise there. So I kind of see almost Europe and Africa as kind of this almost heading to a wild, wild west type thing where who's going to control that? Who's going to have that? And Europe doesn't seem to be doing a good job of getting its own house together.
Great.
Yeah,
Great.
it's a bit scary. Now, having said that, I think you're going to have to, if Europe can get its act together, you will start seeing the return of industrialization there. Kind of Germany went from being this industrial powerhouse to almost a laughingstock. How do you get some of that back?
Agreed. Agreed. You mentioned China and trade. I'm kind of sitting there in the back of my mind thinking that there's more to this move in Venezuela than just simply oil to the U.S. I think, he's clearly the Trump administration is handcuffing oil exports from Venezuela to China. My understanding, I think you know this a little better than I do, is that Venezuela is a key exporter of oil to China. They're trying to hit them, where it hurts, perhaps bring them to the negotiating table on trade.
Yeah, so I'll say one thing that I think is slightly positive away from the China. I do think there is an intention that if we can get rid of the drug business in Venezuela, put a crackdown on that, Venezuela becomes a more viable entity. You have fewer forced migration out of Venezuela. So it does help, I think, on the immigration front where, hey, if Venezuela is viable, you have a much better, opportunity back home. You don't have to come to the U.S.
Mhm.
I think if you cut off the head of the snake in terms of the drugs, the crime caused by some of the Venezuelan gangs here in the U.S. hopefully diminishes or goes away over time. And I do think this is all just setting up for Mexico, where sometime in late Q1 or early Q2, Trump tells Scheinbaum, listen, we're going to get rid of the cartels. We would like you to take the lead in that, and we are happy to support you. But if you don't take the lead in it, we're going to do it on our own because we've now set these precedents, right? We now blow up ships in the water if we believe they're
Mhm.
carrying
Mhm.
drugs. We're willing to attack facilities. So I think there's a migration policy part of this that hasn't been talked much about that would help those countries as well as us. I think, though, you're spot on. I think this is actually going to be a real battleground with China. And if you think about the trade war so far, it's kind of been mainland China versus us. And
Mhm.
this is going to be a legal morass there. Like Trump says, we're just going to take stuff. There's contracts in place, there's
Right.
rules in place. China has what they call the Iron Army, which is a massive amount of lawyers, many of them trained by the best schools in the US, the best schools in Europe, who I think are very prepared to challenge a lot of these, right? They made investment. China had to call their banks together to understand what their credit exposure is to Venezuela, Venezuelan companies. To be honest, you've got Venezuela debt, PDVSA debt, owned by a lot of distressed investors in the US. They're not going to just give the money up easily. So I think you're going to have this as a real legal battleground. And it's truly crucial for China, I think, to fight this and win. Because if they lose here, a lot of other countries that are unhappy with the Belt and Road Initiative projects they undertook, the fact that they gave China and let China invest and thought they'd get more jobs, but China took a lot of the jobs, there'd be this potential massive rollover. So I think this is just starting. China won't do anything until they actually see or hear what we're really trying to do.
Mhm.
Then I think the legal process starts. And I think they're ready to tilt the scales back on, hey, you know what? Those rare earths and critical minerals that we said we'd license to you, I think you start watching. I suspect in the next 2 weeks, you'll hear complaints that we're not getting the licenses we thought. And just the other day, I don't think it's a coincidence, they threatened Japan again on the licenses to export or import rare earths and
Mhm.
critical
Mhm.
minerals from China. So I think I think this is a real battleground. It reminds me a lot of when we were fighting with the Soviet Union. We actually never fought with the Soviet Union directly, but there were these proxy wars across the globe. And I feel like Venezuela now is going to become this, okay, who's right, who's winning? Trump's going to disobey the law potentially or say the law doesn't matter. China's going to fight through the course of law. I think this gets uglier before it gets better on that front.
So a lot more uncertainty in the near term.
Yes. And I think so far we're not pricing any of that because it's been pretty smoothly and everyone's like, oh, well, China hasn't reacted. Well, China has nothing to react to, right? We haven't done and said how we're planning on taking these resources. It's starting a little bit today. It's supposedly, as we're talking,
Right.
we're potentially boarding a Russian tanker carrying oil from Venezuela. This thing has a risk of escalating.
And I think you're right. It's not priced into the market yet. If anything, we're just coming off CES. There's a lot of renewed enthusiasm for AI and the AI build out, AI adoption, but also autonomous driving, robots, and CES is the typical fanfare poster child for what's to come, both near term and longer term. I want to pivot though a little bit because we did get some jobs data today. We're talking on Wednesday, January 7th. We got the ADP private job creation numbers for December. They came in weaker than expected, 41,000. Market was looking 45, 47. I sit back and I go, if I look at the trailing 3 months, Peter, 56,000 jobs in the private sector were created according to ADP. That's a little less than 19,000 a month. That's down compared to what we saw in the third quarter, down compared to what we saw in the second quarter. Hard to get excited to come all the way back to our, the start of our conversation about the consumer, about the housing market, and some other areas. Am I misreading this?
No, I think you're right on that. I think when we've talked to a lot of corporations, I think people's budgets for next year are going to be lower. Like, so some of the spending, even all the uncertainty, people went ahead with their budgets because they had them in place and they were trying to figure it out. The one thing that was not sacrificed was AI spending, because whether the economy was going to be good or bad, everyone wanted to be more efficient. I think there's a lot more questions around that. The other thing is, I don't think a lot of our economic data picks up small and mid-sized businesses very quickly. So I think, and especially with the government shutdown, I think that made it even worse. I think that's the place that's struggling. And I keep looking at the tariffs, right? And to me, you start looking at accumulating. I think we're at 240 billion now of tariff revenue. That's all good, but now you're going to start seeing the bite. And I think everyone had a quarter to two where, one, they preloaded things. So you had goods that some were tariffs, some weren't. Two, you realize, shoot, you can't say anything about tariffs because the administration is going to come after you. But now I think those are starting to hit people and they're starting to hit the economy, and it's really hard to get around, right? Basically, if you have twice a year inventory turnover, well, now every inventory has been turned over into a new tariff world.
Right.
Everyone's trying to figure it out. And I think, it's almost like when we talk about the budget deficit, everybody's like, oh, deficit's going to be 10 trillion in the next 5 years. Bonds have to sell off today. Yeah, no, that budget deficit increases slowly over time and will impact us. And I think that's where we're with tariffs, is it's starting to have this bite. It's starting to hurt companies. It's starting to hurt profitability. And people are very reluctant. I'll be really curious to see if January, February, you start seeing a lot of new hires come on board or not. Because I think there's a small window that either people start getting on board with this. My understanding is you can see it in last year's college employment rate. It's not as high as it has been before. And this year, everything you hear anecdotally is, if you're coming out of college, this is a brutal time to be looking for a job.
Yeah, everything I've heard is go get your master's, go to law school, go to med school.
Yeah. Right? And, I think we talked about that in the summer. One of the things that always has convinced me the job market's worse than we've seen is the law school applications are off the chart. And again, law school is a place you can kind of hang out, right? While you're doing something. And 3 years is better than sitting at home, I guess.
I don't know many lawyers who would say they were hanging out in law school, but I get what you're saying. On the housing market, we at the Pro Portfolio have avoided it. We've been very concerned about, the pace of job creation, the use of incentives, sales, sweeteners, impact on margins. I do think we might see some room to some improvement in the next couple of months for the repair remodel side of it. But when it comes to the housing market, being a macroeconomist, what's the canary in the coal mine that you're looking for?
This is the one thing that's kind of ironic, is I think Trump and Besson are really convinced that they got to get mortgage rates lower, which will somehow help the housing market. I just don't, I see that being inflationary. I see like, okay, now I can afford more. People, I don't think they're going to free it up that way. The one thing, and this is probably sounds pretty harsh, but I think the one issue would be if they actually are successful in reducing immigration, sending people back, or on the successful side, if people decide to leave and go back to their own countries because, hey, the job opportunities now in Venezuela or Mexico are better, that could actually relieve some pressure on the housing, where you actually free up some existing homes or existing rental properties as those people leave. Other than that, I don't see how this does very well anytime soon. The only other way I think that we can see real kind of affordability, and so when I traded the high yield home builders, talked to Mr. Toll, and he was the one thing he
Bob
told.
Toll, you spoke to Bob Toll
Oh
back in the
yeah,
day.
yeah, Bob Toll. We were a big trader of his bonds. So the one thing he said that has really resonated with me is the builders, at least in this day, make the most money when they're developing property in new areas. So when new areas get exciting, like Las Vegas, they can make a lot of money because they can buy good property, put a nice house
Hmm.
on it, and sell it at a premium. They struggle to make money when everyone wants to move to New York or everyone wants to move to Miami because all the good property is taken. So if I'm right and you start getting some of this reindustrialization, it could
Hmm.
create almost like fracking did, right? Fracking set up new communities and new areas. The builders did phenomenally well. And then you can create that cheap housing, right? Because you can buy land that's relatively inexpensive, put up a decent sized house at a reasonable cost. So I think that would be the only thing that kind of really excites me about housing is if this kind of ProSec concept starts and you start getting new areas of growth where, hey, this is where the cobalt is, this is where we're going to do the refining.
Right.
Let's say it's a Mississippi does really well. Okay, now we can build houses in and around Mississippi that are affordable. I think that's what we're going to need to make housing exciting for me.
So it sounds, not to put words in your mouth, but it sounds like you might be more optimistic in the housing market 2027, 2028 than you are in 2026.
Yeah, I think that's fair. And some smart people have told me to look at Whirlpool that they think the Trump administration is going to get some good vibes going, and I struggle to get there this year.
Yeah.
Again, I think this uncertainty is just so high too. Like no one's looking to make big expenditures. I can tell you, all walks of life, it doesn't matter who I'm talking to, everyone's talking about their electricity bill right now.
Yeah.
Electricity bill has become a topic of conversation from the taxi drivers all the way to the country club. It's become very noticeable. I think it's only going to get worse before that gets better. So I think things like that, when people are so wary of that, I don't see that you're going to get this big home building type boom.
Yeah. All I heard in that, Peter, is continue to shop at Costco and Target. Not Target,
Exactly.
TJX, TJX.
And
So,
keep your lights off as much as possible, I guess.
yeah, exactly. Turn that hot tub off. All right, Peter, anything we didn't talk about before we get out of here that we should?
No, I think I still like Intel. I like AES. I like those companies.
Mhm.
I want to, I think, invest in Central and South America. There's an ETF ILF that seems to try and focus on that. So I think one thing that we're going to have to be very good about this year is when we talk about emerging markets, I think there's emerging markets Asia, emerging markets Europe, Africa, and emerging markets North, Central, South America. I'm very comfortable with the Central South America emerging markets. Not sure what to do with China and that part of the world. And I want to, I think, dabble in Africa to the extent you can find investments there, because I think that could be the next part, right? Trump wants to be transactional. He will
Hmm.
be transactional. I think he'll be more successful with Africa than we were under the Biden administration. So maybe there's some growth opportunity there. But I think when we talk emerging markets, I like Central and South America right now. I think they will be big beneficiaries of this policy. The one thing I would suggest too, the National Security Strategy paper, it's only 39 pages, double spaced. It's pretty easy to read. It's actually like one of the few government things, like you can actually read it quickly and it makes some sense and it tells you where we're headed. And so when we were talking about this ProSec, I think if you're a corporation and you're trying to build, where do I build a new factory? I can build it in Asia where China's Navy is all over the place. We have less ability, or we can do it here in South or Central America or the US. I think that's going to wave in like this importance of shipping. I think we're going to try and build shipbuilding back. So that's another area looking at. I think Brunswick could actually do pretty well in under this environment. So I think focus on US companies that make stuff that we need.
Excellent, excellent. Peter, we'll be talking more in 2026 than we did in 2025. So I look forward to continuing this dialogue as the landscape evolves. But in the meantime, folks can catch your writing over at TheStreet Pro. Where else can they find your stuff?
They can follow me on Twitter at TFMKTS, so kind of short for markets, and also at academysecurities.com. We publish a bunch of our research up there, so you can find some of it there. Some behind the paywall, some's not. But yeah, it's going to be an exciting time. Appreciate the time and all the work you do too. I follow a lot of your advice too.
Thank you, thank you. Peter Tchir, folks, head of macro strategy at Academy Securities. That's today's podcast. We'll be back shortly, before you know it, with a fresh episode.